Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, how's your day? I hope you all fine. In this change, I would like to present and give a little bit lesson to all of us related to our condition right now in facing this COVID-19 that affect our economy sector especially. As we know, not only in terms of health side that the government and us put the concern on, but also in economic side, political side, and etc. But in this opportunity, I will explain more about in economic side, which is monetary policies that Bank Indonesia carry out in stabilizing the economy due to COVID-19 and also the effect of COVID-19 on monetary stability and how the solution. So there are 5 policies that Bank Indonesia carry out in this pandemic. The first one is the intensified triple intervention policy to ensure rupiah exchange rates move in line with the currency's fundamental value and market mechanism. And the second one is the lower the FX reserve requirements for commercial banks from 8% to 4% effective 16th March 2020, which will increase FX liquidity at the banking industry by around 3.2 billion US dollar in simultaneously alleviate foreign exchange market pressure. And the third is lower the rupiah reserve requirements by 50 bps for banks financing export-import activity in coordination with the government. And the fourth, expand the range of underlying transactions available to foreign investors and others to provide alternative hedging instruments against rupiah holdings. And the last one, reaffirm that global investors can utilize global and domestic custodian banks to conduct investment activity in Indonesia. So there are 5 policies that Bank Indonesia try to give a policy to our economic in Indonesia. Where is the previous slide we talked about the policies that Bank Indonesia carry out, but in this slide we will concern about the World Bank that estimate that COVID-19 pandemic will significantly slow Indonesia's economic growth this year and may throw millions of people into poverty. So there is the graphic of the impact of COVID-19 on global poverty. Nowcasting global poverty is not an easy task. It requires assumption about how to forecast growth and how such growth will impact the poor, along with other complications such as how to calculate poverty for countries with outdated data or without data altogether. All of this goes to say that estimating how much global poverty will increase because of COVID-19 is challenging and comes with a lot of uncertainty. Such forecasts reveal that COVID-19 is likely to cause the first increase in global poverty since 1998, when the Asian financial crisis hit. With the new forecast, global poverty, the share of the world's population living on less than $1.9 per day, is projected to increase from 8.2% in 2019 to 8.6% in 2020. Compare this with the projected decline from 8.1% to 7.8% over the same time period using the previous World Economic Outlook forecast. The slight change from 8.2% to 8.1% for 2019 happens because the revised growth forecast also changed for non-COVID reasons for some countries. Taking this into account, it means that COVID-19 is driving a change in our 2020 estimate of the global poverty rate of 0.7 percentage points, or we can also say that 8.6% through 8.2%. Another way to put this at the estimate suggests that COVID-19 will push 49 billion people into extreme poverty in 2020. There are no signs that the Covid-19 pandemic will ease up anytime soon. In fact, it looks set to worsen, particularly in Indonesia. While the various efforts to contain the pandemic continue, the reality is that the pandemic has led many countries to the brink of absolute crisis. Indeed, the International Monetary Fund has declared that the world is experiencing a far worse recession than that caused by the 2008 global financial crisis. However, what is most important and requires the most attention in ensuring that banks and other financial institutions can maintain liquidity, especially in the case of small and not so well managed banks and other financial institutions. So, therefore, the following steps are urgently needed. The first one is first, an in-depth review of banks or other financial institutions. Are there any banks or other financial institutions that are likely to experience liquidity problems in the short term? Second, all mutual funds and investment products must be reviewed to identify as soon as possible a potential for default. The third, offshore US dollar corporate bonds needed to be monitored. The fourth, the country's top 10 banks needed to continue to lend selectively, especially to companies experiencing liquidity problems but with good business prospects overall, including MSMEs. The last one, liquidity flow to the market needs to be maintained through the top 10 banks by providing them with liquidity assistance so that they can continue lending, albeit at lower interest rates, both loan and deposit interest rates. The stock market also get the impact by the coronavirus. So there's the graph of the impact of coronavirus on stock markets since the start of the outbreak. Big shifts in stock market, where shares in companies are bought and sold, can affect the value of pensions or individual savings account (ISAs). The FTSE Dow Jones Industrial Average and the Nikkei have all seen huge falls since the outbreak began on 31 December. Investors fear the spread of the coronavirus will destroy the economic growth and that government action may not be enough to stop the decline. In response of that, central banks in many countries, including the United Kingdom, slashed interest rates that should, in theory, make borrowing cheaper and encourage spending to boost the economy. But some analysts have warned that they could be volatile until the pandemic is contained. A global novel virus that keeps us contained in our homes maybe for months is already reorienting our relationship to government, to the outside world, even to each other. Some change these experts expect to see in the coming months or years might feel unfamiliar or unsettling. But crisis moments also present opportunity, more sophisticated and flexible use of technology, less polarization, a revived appreciation for the outdoors and life's other simple pleasures. No one knows exactly what will come, but here is our best step at a guide to the unknown ways that society, government, healthcare, the economic, our lifestyles, and more will change soon. So, our hope is that all of this pandemic will soon be over and become a normal.